Hi everyone, good morning. You're watching Market Fatafat right here on ET Now. I'm Mubina Kapasi and the markets seem to be bouncing back after that breather we took yesterday. We're firmly once again above 11,900. The broader markets, by the way, are being able to snap 2 days of losses to trade in the green, so no complaints over there. But it's Market Fatafat, so we're going to flag off all the individual movers and shakers in trade. And for that, we have with us Soumya Sharma, ET Now's research analyst, and on the technicals, Kunal Bothra and Kunal Rambe of the streets right here in our studios. Thank you to all of you for joining in. And okay, let's kickstart then Market Fatafat. Soumya, let's start off with M&M. Stock certainly has taken a bit of a downtick, has seen a downtick rather. CLSA has downgraded the stock. Why is that?
Yes, CLSA has downgraded the stock. They say that the fourth quarter was weak, but it was pretty much better than estimates. Nevertheless, they've downgraded it from buy to underperform and even have cut the target price from 850 to 690. They believe that tractor industry demand is coming under pressure and there's a sharp fall in legacy SUV volumes eating into the benefits of the new launches. In fact, they've also cut their FY20 and 21 EPS estimates by 14 to 19% on lower volumes and margins. So they are maintaining an underperform stance now with a target price of 690 per share.
Okay, let's continue with the countdown then. And Kunal, let's go across to you. ICICI Prudential, what is it that you're observing here?
So the last 2 months were exceptionally interesting for the stock because there was this big gap which was created I think on 26th and 27th of March 2019 where the stock rose from 310 to almost 330, 340 levels, and post that we've seen that the stock has just gone into a different trade or a trend altogether. Volumes have picked up substantially higher. The stock has crossed and closed comfortably above its long-term averages. You see new trends shaping up and prices are more stable in terms of the trend. So I believe ICICI Pru is showing some exceedingly strong chart pattern, and I think as a positional play it could be a good buy at current levels. 425 plus could be a target range for ICICI.
All right, that of course is ICICI Prudential for you. It's higher by 3.2% in trade. Power Grid, meantime, has turned out quite a strong show in the fourth quarter. Revenues are higher by 18%. Profits are as well, have been able to jump approximately 52%. No complaints on the margin front as well. CLSA has a buy stance over here. Target at 217 rupees is what they are watching out for. Kunal Rambe, over to you then, and it's interesting to see that TCS has continued to go higher today as well in trade. Your view here?
Right, so we saw in 2018, October 2018 when the stock made high of 2250. Right after that, again in January 2019, the stock made the same high. Right now it came down, but the trend is definitely intact. Keep the stop loss of 2075. I expect the counter to first reach 2250 and even higher than.
Okay, let's just take a quick breather on Market Fatafat and go across to PFC. It's delivered its fourth quarter numbers. NI high by 46%. There has been a provision right back, so that I think has assisted that profit figure too. We have with us Rajiv Sharma, CMD of PFC. Mr. Sharma, good morning. Thank you for joining in. A great profit growth on a year-on-year basis. What has led to this performance despite the net interest income being slightly lower than expected?
We settled one account and which has the provisions have been reversed, Ratle project in Jammu and Kashmir. Moreover, our cost of fund has also come down during Q4 by 30 basis points. So in quarter to quarter profit, there is a jump of 166%, and in annual profit, there is a jump of 66%. Our annual annual profit is 6953 crores and quarterly profit is 166% higher than the last quarter. Our spread has also increased during this quarter and also during 18-19.
Okay, so by how much have spreads improved, like you mentioned, during the fourth quarter, and what has been the improvements in margins as well on a QOQ basis, and what can we expect in FY20?
NIM has also gone up. It is 3.37% during the year, and we are quite confident that we will be able to maintain the margins and profitability in future also, because we are settling the stressed assets one by one, and Ratle was one of them. Other 3 projects are in the queue: Dense Energy, Siga Energy, and SR Transmission. So almost 100% principal we are likely to get after settlement of these 3 accounts.
3 years, you were speaking about 3 accounts rather wherein recovery is expected. What's the exposure to these accounts, and also the quantum of recovery is expected? What sort of a resolution can we expect?
It is under advanced stage of settlement, and our total exposure in these 3 accounts will be around 1500 crores, and we are likely to get 100% principal amount back. And there is a provision of 11% already in these 3 accounts.
All right. We'll also, let's just talk about the private sector, which, undoubtedly still has stress. So if you could share with us the total stressed assets on PFC's books, and what kind of improvement can we expect in, FY20 in terms of NPAs, in terms of recoveries?
Our loan book is 3,15,000 crores, out of which 83% is government utilities, where there is not a single NPA in government sector. Remaining 17% is private sector, out of which 8% is perfect. There is no NPA, and we are regularly being paid by the project developers. Remaining 9% is NPA. Today, our gross NPA is 9.35% and net NPA is 4.55%. We have adequately provided for already 51%. We have provided for stressed assets, and in a systematic manner and with a well thought strategy, we are moving forward in resolution of stressed assets. Ratle Hydro project was one of them, in which we have already reached a settlement, and 650 crores have been reversed in this year.
That's good to know. On that note, thank you, Mr. Sharma, for joining in and breaking down what went by for PFC in the 4th quarter. That one too came out with its numbers, a 2-fold jump in profits. But as the World Cup officially kickstarts from today, India Infoline has prepared their own fantasy equity league. Find out which stocks have made it to the top 11 and which ones are benched for this season. Vivek Iyer joins in with the details. Vivek.
Well, we are talking about the World Cup at this point of time. It's starting off today, and IIFL has actually kickstarted the World Cup with a portfolio, and this particular portfolio that they are talking about at this point of time, this particular portfolio, what they're saying is that this is the one portfolio that is going to be a definite winner for sure. So let's start off with the team that they have chosen, and this particular team, it has 2 very, very solid opening batsmen. India has Rohit Sharma and Shikhar Dhawan. What do you think, IIFL has in their portfolio? You have Larsen and Toubro, extremely strong order book, India's largest conglomerate in terms of the entire infrastructure space. Also, you're talking about SBI, the entire 2019 has been about the resurgence of the PSU banking space, still very cheap, and this particular name is going to be a definite good opening combination. We're talking about the middle order. Middle order, of course, you've got to have your Virat Kohli, the top-notch batsman, the world's best batsman, India's best company, HDFC Bank. IIFL expects this particular company to hit $100 billion in USD mark very, very soon. 2 other names in the, if talking about the middle order, and these 2 names, a lot of it based on potential. So maybe, maybe a KL Rahul is one particular name you'd look at. Gujarat Gas, very well poised in order to go ahead and gain a lot of the volumes from the Morbi industry. And also, if you're talking about Deepak Nitrite, IIFL feels that this particular, chemical company is very well poised and is in very, very fine form to go ahead and showcase another very, very sturdy year. All-rounders, well,
You have Hardik Pandya in India and Reliance Industries. This particular name beat any vertical. You have the oil and gas major, you have the telecom tearaway fast bowler as IIFL puts it, and also if you're talking about other verticals, this particular name continues to beat everyone else even as far as the retail space is concerned. Tata Global Beverages appears to be the backup all-rounder. Prestige for becoming the consumer face of the company, and what they feel at this point of time is that Tata Global Beverages can definitely perform. ICICI Lombard is the MS Dhoni of the team, long-term compounding story, very steady performer. And now you're coming to the bowlers. Bajaj Finance, one of the top performing companies, companies as far as the entire market is concerned in terms of the returns. Well, they've gone ahead and compared it maybe to say a Glen McGrath. What they're saying is that very good long-term compounding story, very solid. As far as most of its bowling and line and length is concerned. You're also talking about an RBL bank, tear away quick. This particular bank, although it's started very recently, has gone and done very well for itself. You're saying that you're going to see sustained increase as far as scale and profitability is concerned. Even though valuations are high, they believe that this particular bank can sustain the high valuation that it is seeing. Lastly, Tech Mahindra, they believe that this particular bowler is going to be the most exciting thing to watch out for. Maybe a Jasprit Bumrah, tear away fast bowler, Yorkers right in the middle base of the stumps, and they believe that with the upcoming 5G opportunity, Tech Mahindra could do extremely well for your portfolio.
All right, Vivek, thanks a lot for that. Well, quick break right here on the show, but don't go anywhere. We're going to keep flagging up more moving papers and breaks. Let's quickly continue the countdown then. It's certainly a very short and sweet version of Fatafat. Ashoka Bilcon is another stock we are flagging off. This after ET has reported that the company is planning to sell its stake in Ashoka Concessions. Remember that this essentially is a consortium other Macquarie, etc., and other investors as well. So all of them want to sell off their stake in Ashoka Concessions. The value is at 5,000 to 6,000 crores. The stock had actually spiked in the earlier part of the trading session at around 10 o'clock, but subsequently has completely given up all of those gains. Kunal Bothra, HDFC, what is it that you're observing?
So it's an interesting chart. Early time frame, the stock has been in a range, but it's forming a triangular pattern. So 2167, 2170 is the breakout point for this triangular pattern for HDFC. And looking at the way the index is poised, it needs a lot of these large caps to try and break out from here for the next leg of rally. So I think if the HDFC breaks out, this could be almost a 40 to 50 point up move for the stock, which has a direct correlation with the Nifty, and that should have a direct impact on the Nifty as well. So that is one stock which a trader should be watching out for. Breakout about 2170, would recommend a buy. Targets of 2220 to 2225 on HDFC.
All right, that's HDFC. And Samya, very quickly, Adani Power, how were the numbers?
Well, good set of numbers reported by the company. Top line, we saw a good growth of over 69%. Even on the profit line, the company made profits of over 634.6 crore versus loss of 634.3 crore. But at the same time, it also should be noted that there was a tax write-back of 718.6 crore that led to the PAT on the bottom line and that jump. In fact, the company is also looking at raising funds close to about 7,000 crore in their meeting. So let's see what is the quantum of funds and how do they raise it, but the stock's surely gaining on the back of good numbers.
Okay, well, unfortunately, on that note, we're completely out of time. So thanks to all of you for joining in, Kunal and Soumya. We'll wrap it up. Coming up next is Markets at 2.